You've been pre-approved. You've found the house. The seller accepted your offer, and you're almost there. And then someone hands you a document listing several $1,000s in closing costs, and nobody explained any of it. That's what this episode is about. Closing costs are one of the most common surprises in the mortgage process. Not because they're hidden, but because nobody takes the time to explain what each charge actually is. By the end of this video, you'll know exactly what you're paying for, what's typical, and where you actually have a say. Closing costs are the fees and expenses required to complete your mortgage transaction. They're separate from your down payment and they're due at the closing table, in addition to your down payment. The total typically runs between 2 and 5% of the loan amount. On a $300,000 loan, that's $6,000 to $15,000. It's a wide range because the actual number depends on your loan type, your location, the lender you choose, and what's being negotiated in your purchase contract. You'll see these costs laid out on a document called the loan estimate, which your lender is required to give you within 3 business days of receiving your application. You'll see them again in a final form on the closing disclosure, which arrives at least 3 business days before your closing date. Those 2 documents are your roadmap. Know them. Closing costs break into 2 main buckets: lender fees and third-party fees. Lender fees are charged by the company giving you the loan. This includes the origination fee, which covers the lender's cost of processing and underwriting your loan, and some discount points, which are optional prepaid interest you can pay up front to lower your rate. We'll come back to these 2 points in a moment. Third-party fees are charged by outside services required to close the loan. These include the title company, the appraiser, the attorney in states that require one, the surveyor, and others. These are real services performed by real companies, and the costs reflect that. Let's go line by line on the most common closing cost items. Origination fee. This is the lender's fee for making the loan. It typically runs between 0.5 and 1% of the loan amount. Some lenders advertise no origination fee, but the cost is usually recovered in a higher interest rate instead. There's rarely a free lunch here. It's usually a question of whether you pay upfront or over time. Discount points. 1 point equals 1% of the loan amount. Paying points is a way to buy down your interest rate. Whether it makes sense depends on how long you plan to stay in the home. The longer you stay, the more time you have to recoup the upfront cost through a lower monthly payment. Ask your lender to calculate the break-even point before deciding. Appraisal fee. The lender requires an independent appraisal to confirm the home's value before approving the loan. This typically runs $400 to $600, sometimes more in rural areas or for complex properties. This fee is often paid before closing, sometimes at the time of the appraisal itself. Title search and title insurance. The title company researches the property's ownership history to make sure there are no liens, claims, or legal issues that could affect your ownership. You'll pay for a lender's title insurance policy, which is required. You'll also have the option, strongly recommended, to purchase an owner's title insurance policy for yourself. If a title dispute ever surfaces after closing, owner's title insurance protects you. It's a one-time premium, and it covers you for as long as you own the home. Settlement or closing fee. This is the title company or attorney's fee for handling the actual closing, coordinating all the documents, managing the transfer of funds, and recording the deed. It typically runs $500 to $1,500 depending on location. Recording fees. Your local government charges a fee to officially record the deed and mortgage in public records. These are usually modest, a few $100s, and they vary by county. Prepaid items. These are not fees in the traditional sense. They're costs you're paying in advance. Prepaid interest covers the days between your closing date and the end of that month. Homeowner's insurance is typically required to be paid for the first full year at closing. Your initial escrow deposit funds the account your lender uses to pay property taxes and insurance going forward. These items can add up to several thousand on their own. Survey fee. Some transactions require a property survey to confirm the boundaries and identify any encroachments. This is more common in certain states and rural areas and typically runs $400 to $700. Here's the honest truth. Most closing costs are what they are. The appraisal costs what it costs, recording fees are set by the county, title insurance rates are regulated in many states, You're not negotiating most of these line items. Where you do have some control is on lender fees. Origination fees, discount points, and lender-specific charges can vary from lender to lender. This is why shopping your mortgage is worth doing. If you get loan estimates from 2 or 3 lenders and compare them side by side, you may find meaningful differences in the lender fee section. The third-party fees will look roughly the same everywhere, but the lender fees can move. One more thing worth knowing. In some transactions, sellers can contribute to a buyer's closing costs. This is called a seller concession. Whether that's available to you depends entirely on the market and what's been negotiated in your purchase contract. In a comprehensive market where sellers are getting multiple offers, concessions are rare. In a slower market, they're more realistic. Your real estate agent will have the best read on what's typical in your area right now. The loan estimate is your first detailed look at projected costs. It arrives within 3 business days of your application. Don't glance at it and file it away. Read it carefully. If anything looks unfamiliar, ask your lender to explain it. The closing disclosure is the final version, with actual numbers. You receive it at least 3 days before closing, and that 3-day window exists for a reason. Use it. Compare the closing disclosures line by line against your loan estimate. Most fees should be the same or very close. Some fees are allowed to change by a small amount. Others, like lender fees, should not change at all without your consent. If something looks significantly different and you don't understand why, ask before you sit down at the closing table. Closing costs are not a mystery. They're a list of real services performed by real companies to make your transaction happen, plus the lender's fees for doing their job. Once you know what each line item is, they stop being a surprise. Your job is to know what's on your loan estimate, compare it to your closing disclosure, and ask questions about anything that doesn't match. That's it. The costs mostly are what they are, but knowing what they are puts you in control of the conversation. Next episode, we're covering down payments, how much you actually need, what loan programs change that number, and what most buyers get wrong about the 20% rule. If this was helpful, save it for when you're getting ready to buy, and follow BankBasics on YouTube. Search for it for the rest of this series.